Greetings and welcome to this week's edition of Trade Theory on Tuesday, May 5th, 2026. Just a quick reminder, Vantage Point macro newsletter will be rolling out within the next week. So be on the lookout for links to come out with this Trade Theory newsletter analysis for next week. And later this week as well, in my profile, I will have the links to Vantage Point macro newsletter, which you can sign up for free and get weekly start of the week market structure information every Sunday, and it's completely free of charge. So this analysis that you'll be seeing today is what goes into the newsletter so that you can have some real clarity as it relates to the markets each week. All right. With that being said, this is the dollar index here. It was at the time of this recording in profit about 0.2% from our sell at 98.56. It's retreated at that point. It's retreated since then. And that's still slightly in profit, but it's essentially a break even right now at 98.43. But this is where we're looking to sell the dollar down to 96.56. So we're looking out for that. All right, we're going to move on to the 10-year Treasury note, the yields for the 10-year Treasury, and we're going to see what's going on there. So we have had a change of disposition, if you will, or a change of sentiment down at the 4.32% yield rate. So what I have here is yields are expected based on this analysis and what I see. Let me zoom in a little bit so you can see that better. I'm expecting yields to fall no lower than 4.39% before they pick up. So if you are a buyer of these notes, know that you have between now and the 4.39 yield rate. That should be the lowest that yields go before actually starting to rise again, because I believe there's less demand for 10-year notes right now as people are kind of deploying capital into the equity markets in various forms and fashions. So just be mindful of that. If you are a buyer of these notes, that you have a bottom floor of about 4.39% before you can expect yields to continue to rise again, at least based on my analysis. Okay, I'm going to move on to Tesla. So we have a trade in Tesla now, where we actually entered at 376.89, and back on the 27th of April was where we had that set up. So back around roughly around here, and price gap down and took us into this trade. And so we're actually buying 376.89. We're currently 4.15% in profit as of this recording. It's a little bit off of that 392.52, and it's currently at 391.33, but just about 4% in profit currently, and we have a take profit point of 441.13. So we're watching that. And then Nvidia, we're not in Nvidia yet. I see an opportunity for some more downside movement. So I'm actually looking at price to continue to drop. Now it is at the area of interest, so where price broke through and established a new higher. So if you wanted to be a buyer here, you could be a buyer. I'd be mindful that I would not be looking to surpass the 215 price point here. So for me, I'm going to wait for price to retreat further. I think there's actually a higher value entry, and we're not there yet. All right, moving on to Bitcoin. Bitcoin is continuing to pull back, so the buyers of Bitcoin are happy. Remember, I had a daily demand level of 74,737, which means that you could have been looking to buy Bitcoin up into this area of resistance, which I'm looking for. So I believe that there is a supply level up at the 85,635.36 level before price starts to capitulate and fall further to the downside. So you can actually take advantage of this move up to this level, but at that level, I'd be mindful to be looking to short Bitcoin, and we'll see what happens once we get there, because things can change. All right, WTI crude, we had a sell order on here. I got in a little prematurely, so I probably should have picked a higher quality entry point, but we got in at 97.26, and it's currently at 99.275. About 2.07% in drawdown. So we're currently in drawdown in oil. It's a little bit higher than where we got into it, but I'm still watching that, believing that we still have the opportunity to get down to 84.88 in the coming weeks. Okay. Now we're looking at gold really quickly. Gold started to decelerate, so we have a sell trade on gold. Our entry area is 46.76.75 back on the 27th of April. Currently price is well, at the time of this recording, 45.63.48 had us 2.42% in profit. It's a little bit lower than that now, so it's actually a little bit further in profit. Gold is, and we have a downside target of 41.8025 that we set on the 27th of April. All right, looking at the US 30, we have the market has been moving higher. Having buy entry point set up for 48.696 before getting back in, and then I have a take profit of 49.46421, and then a more aggressive take profit of 50,28632. I see more downside on the Dow, so I would probably do one of two things. I'd actually exit at the 49.464, or if you want to take partial profits and let it run, I would adjust my stop loss to just above the 48.696 so that we can protect that upside run and be more aggressive with that if you want to maximize the potential profit out off the Dow before it possibly retreats. Looking at the Nasdaq here, Nasdaq has actually hit a take profit point that we set back in February of 27,023, which wasn't anywhere near that, so it's moving up higher. So I'm definitely waiting on this trade, this to actually retreat, at least to the area of interest here, if not further down. So if you're not in from where this level here, where we had 24.066, this supply level turned into a demand level where you could have bought up into this area, I'd wait for a retreat on the Nasdaq. And then wrapping up with the S&P 500, what we've got here is price blew through our area of interest. I think we have an upside target that we're looking at 73.98.81 that we set on the 10th of February 26, and then we'll wait for a pullback before getting back into that trade as well. So those are your trade setups for this week, and until next time, enjoy the day. Happy trading.